Okay, so inshallah, today we are going to have a very important discussion on tax planning and halal wealth management. So we're just going to give a few more minutes for people to join the webinar, inshallah, and we'll probably start in the next few minutes. I will take this time to mention that if anyone here is planning on attending the upcoming Reviving the Islamic Spirit conference taking place in Toronto this coming weekend, inshallah, please do come by and check us out at our booth. We'll be sponsoring the Reviving the Islamic Spirit conference, and it would be great to see you in person at the Sharia Portfolio Canada booth, inshallah.
Hi, Sadiq. Can you hear me?
Assalamu alaikum wa rahmatullah, Asad. Thank you for joining us.
Excellent. Walaikum salam. How are you?
Alhamdulillah. How are you?
Excellent.
Okay. So we'll just give this a little bit more I see some more people joining the room, inshallah. And then we'll begin in just a couple of minutes, inshallah.
Sounds good.
I was just mentioning before your arrival, Asad, that I was inviting anyone here who's also attending the Reviving the Islamic Spirit conference to this coming weekend to come by the booth, inshallah. I believe you'll also be there this coming weekend at the
Inshallah,
conference.
yes. I will come by. I most likely will see you. I'll come by your booth on Saturday, Sunday, both. Yeah.
Inshallah. Yeah, we're gonna have cookies, so please come by and have some cookies, inshallah.
Good, good. Inshallah.
Okay, so I think we'll give it one more minute for any
Sure.
last people, and then we'll begin with introductions, inshallah, and then we can get into this important topic that we have planned for us today, inshallah.
Okay.
12:05. Yeah, I think we can start now, inshallah. This is good. So, Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Sadiq Muhammad. I'm the advisor team manager with Sharia Portfolio Canada. Sharia Portfolio Canada is Canada's first provincially licensed halal wealth management firm that is owned and managed and for Muslims, specifically for the needs of Muslims, though, of course, we are open to having clients of any faith denomination. We invest according to our values, which prevents us from investing in things like alcohol, adult entertainment, interest-based companies, gambling, things like this, in addition to companies that exceed certain financial ratios like debt to equity ratios or revenue that is derived, a certain percentage of revenue that's derived from any impure activities. We offer complete wealth management services, and inshallah, I would encourage everyone to have a look at our website or get in touch with us for their halal wealth management needs. Today, we have a very special guest, Asad Dean of Dean and Associates Accounting. He is someone who I have known for 25 years now, alhamdulillah. And someone who I have a lot of respect for. He is the head and founder of Dean and Associates Accounting. They have 6 locations in Ontario, and they service clients in Ontario and other provinces. Asad specializes in tax planning, estate planning, and navigating the challenges that incorporated clients have for tax savings and investments, so business owners. His firm specializes in medical accounting, estate taxes, small and medium corporations, holding companies, cross-border international taxes, and investments. So really a broad spectrum of services that his firm offers. They have a very client-centric approach. They really put you, the client, at the center of their work. And Dean Accounting really does treat all of their clients, especially their corporate clients, and also their personal clients, and all of their tax needs as their very own, and gives them the best planning strategies for short and long-term needs. They work with their partners in ensuring that all of their planning and attention is addressed. So without further ado, I know that I can't really do full justice to Asad and his team, but I will turn it over to Asad to speak to us a little bit about tax planning, corporate tax planning, and all that. And then inshallah, I'll come back at the end and we can field some questions.
Okay, thank you so much, Sadiq. And so thank you very much for giving us this opportunity to come and speak to your clients and those who have joined the seminar. I hope this will be a very valuable seminar for you because one of the most important relationships you're going to establish in developing and becoming financially free is having a good tax advisor, good financial advisor. And obviously the third wing in this is a lawyer for, your will and how you leave your wealth for the next generation, which is part of estate planning. So depending on where you are in your lifestyle, there's an accumulation phase, there's pre-retirement phase, there's retirement phase. So there's different tax strategies we have to deploy in those specific situations. I'm going to go over a quick presentation I have um, uh, that basically I'll talk to it because so our firm, I established it full time back in 2014. It was in part time from 2009 actually. I myself worked for Pfizer, Sanofi, some other companies before I started my own practice. I had a lot of medical professionals in my own family who were struggling with accounting, tax, financial advisory needs, so I entered this space. Alhamdulillah, we've done really well since then. Typically, when a client comes to us, we have myself. I am the head chef. I do all their tax planning. I look at them over in a very holistic perspective. Look at, what are their short-term, long-term needs? What are their sources of income? Are they incorporated? They're not incorporated. So, we look at all of that. And, typically, if a person is working a regular job, they typically just need a tax return and they need some advice about RSP contributions, which are a combination of themselves and spousal. And we work with our partners like Sharia compliance so that we say, look, definitely if you want to get some of your taxes that you got back, you should, contribute to RSPs. And then we will introduce them to Sharia compliant and then they will do that. But on our end, we'll handle the tax and those related things. If you are an incorporated, you are a business owner, that's the ideal fit for us, okay? Because you're always looking for an accountant who can help you in a myriad of complex tax strategies that are out there. So on a typical person who's incorporated, we have the head accountant, we have a financial advisor, an accounting and tax manager, and a bookkeeper. So like in this case, it would be the financial advisors. In this case, would be Sharia compliance. They work with, as part of our team, they handle your RSPs and corporate investments. In ours, and we manage the accounting and tax. There's typically a bookkeeper as well if you have a corporation. We offer our clients like block fees packages. So depending on your situation, I can give you a free valuation of, just taking a look at, how you're being paid, what structure do you have in place? Does it make a lot of sense? Does a family trust make sense to you? Are you sufficiently covered for estate planning, short-term needs, how to save, reduce your tax liabilities? Basically, a lot of people are looking to see how they can minimize their tax liabilities, and we help them navigate those areas. Yeah. The other thing is, if you're working, the things you need to focus on is obviously having a good financial management strategy. So living within your budget, making sure you're doing a balanced investments, whether it's real estate, looking to maximize your RRSP contributions every year, because once that period and window ends, that tax that you paid for the year will not come back. And one of the only ways for persons who are non-incorporated is to contribute to RSPs. Obviously, if you have been fiduciarily responsible, you can put some money also in TFSAs. And if you never bought a house, then the first time home savings account, the FHSA account, is something you should definitely look at as well. If you're incorporated, you look at corporate investments, right? Should you set up a holding company and perhaps put all the investments under there? Should you have a family trust, possibly? And if you're incorporated, there's a lot more options you have in terms of tax deferral, tax planning, whether it's shareholder loan, home loans, etc. Yeah. So, these are the areas we help our clients with. We always, we can provide you a complimentary review of your current structure. We can look at, how are your finances being organized, and some people nowadays are looking, because of the capital gains that has been introduced, they want to make international investments, which is not a bad idea given the fact that there's always economic, political uncertainty. Many people are looking to move to the United States. Many people are looking to move overseas. They're trying to navigate our current economic and political environment in Canada here. And so it becomes increasingly important that you take your finances and the advisors around you more seriously than ever, because, there's a number of areas, whether your children are looking to buy a house, whether you're looking to retire, whether you're looking to see, if I should start my own business. If you're already incorporated, obviously, you should probably pick up the phone and call me, or send me an email, and definitely I can do a complimentary call with you just to see kind of where you're at. There's no harm, and I explain this to a lot of people. This morning a pharmacist called me, and I looked at what he had, and I said, yeah, I mean, your structure is pretty good right now. His situation is his accountant was retiring. Okay. So, sometimes, most of the time, whatever clients come over to us, we find a lot more savings and strategies to deploy for them. Also, our firm does US and Canada taxes, so people own properties in the US. Um, you can always have it structured properly. And obviously, you want to ultimately mitigate your estate taxes that could come into play depending on how you set up your will and other things. So the relationship with the accountant is very critical for an individual, as it is where you invest your money. I'm very happy to be working with Sharia compliance, their investment portfolio. They've done actually very well. I've looked at their performance of a lot of their products. And people are increasingly looking to make sure that their investments are not being used against their own ummah or their own people, as this year has been quite politically sensitive for our community. So yeah, we want to make sure that our investments are going in the right place. We want to make sure we avail of every single opportunity to reduce our tax liabilities. And that's why accountants are there for, taking care of that aspect of it. Um, what else? I'm open to answering any questions anybody might have. Feel free to ask me questions. I can give you any question that you're looking for. Couple of just highlights, if you're incorporated, should you get a salary or dividends or eligible dividends? That depends on your situation. But salaries, you can't get additional contribution room on salaries past 180,000. Dividends are a great way to pay yourself from a corporation. Um, Definitely, if you have young children, you should look at getting RESPs, because they are a way of saving for the children. Plus, there's government matching contributions on that. So really, you got to deploy the best practices in your situation to make yourself pull ahead. Yeah. I see here there are participants. I don't know if they want any questions. Is it, yeah, the floor is open. If they have any questions, they can answer. If you have any questions, you can ask me, Sadiq.
Yeah, absolutely. Jazakallah khair. Well, jazakallah khair for that presentation and explaining your services. One question that I often get asked by my clients, because many of my clients currently reside in Canada and
Yeah.
they contribute to their RRSPs, their Registered Retirement Savings Plans, but they do intend on, they're unsure if they should continue investing or contributing to their RRSPs because they intend on retiring abroad. Perhaps you could speak to us a little bit about the
Oh
tax
yeah.
implications.
Sure, sure. Great question. Awesome. Yeah, so RSPs are the only way you're going to be able to save taxes if you're a salaried. So I would strongly suggest to maximize it. And when you retire, you would riff these out slowly, slowly. You don't have to reside in Canada per se, okay, to even get your pension. So once you are in your retirement phase, people retire in, I was myself exploring where I would like to retire in the future. I visited Turkey a number of times last year. I visited Morocco. I actually like Morocco. So anybody who hasn't been to Morocco, the properties are very affordable. The climate is beautiful, and it's a really great Mediterranean culture there. So it's actually a great place to retire. So in the retirement years, yes, they don't need to worry about their RSPs. They can just take them out. It's called RIF. It turns into a RIF after a certain age. You can just slowly, slowly take that out. You'll get your CPP. If you live permanently out of the country, you will lose your OAS, old age security is mostly for residents of Canada, but your CPP would continue and you can continue to take your money out and it won't be taxed in the jurisdictions where it'll be taxed in the jurisdictions that you have residency. It's not really taxed in Canada per se.
Excellent. That's very helpful. So for those who are in that category, they can continue to contribute to their RSP and they can take the money out by way of
They
a
can,
RIF.
yeah, they can take the money out in their retirement years, depending on, how much they're taking out and stuff, right? You should plan that. Obviously, if they have it in here, they typically you'll get a T4 RSP slip issued at the end of the year when there is a withdrawal, or if there's a RIF, T4 RIF slip, it gets issued. So you may have tax obligations to file in Canada, but you would claim your non-residence tax treaties and other things. You can do income splitting and a number of ways to reduce your tax liability. So yeah, definitely, I would not ever give up contributing to RSPs.
Excellent. Thank you for that.
Yeah.
Jazakallah khair. Another question that I often get asked by my clients is, and if anyone else has a question, oh, actually, I can see it that there is one question coming in. Um, a question, you mentioned family trust. How does this help in estate planning? What are the tax implications? I have already named my RRSP beneficiaries and TFSA beneficiaries to minimize probate.
Yeah, so family trust, largely is used to protect the wealth in a family. It's called family trust for a reason. So hypothetically, let's say an individual leaves in their estate $1 million, which is not uncommon nowadays, given the house prices, given RSP accounts, TFSA accounts, and all those things. So what happens is if you have a family trust, then if you give the money to your children through who are your beneficiaries, and God forbid they get divorced, that money is not part of like it doesn't go to the other individuals. So a way, like example, the Queen of England, example, because we live in Canada here, they will have their money in trust and it rolls out through the trust to their beneficiaries. If God forbid anything happens or the beneficiary passes away or whatever, that money technically can come back to the trust. So the trust is a way of keeping money in the family without having other people come in and purge on it, take it away or whatever. Because, unfortunately, whether our Muslim community is just as much impacted, there is a natural divorce rate, whether it's 30%, 40, 50, whatever. So example, if I was to give my children money for a down payment, I'd rather give it from a family trust. So that God forbid, if anything happens in the future, that $100,000 comes back to the family trust. There's no claim on that. But once you release the money to a beneficiary without a trust, that money is theirs and it could potentially go to the other person. So the worst case scenario I've seen ever is person A passes away his wife inherits the money. The wife then gets married to somebody, she passes away, and then the new husband now has all that money. Okay. So the children were trying to fight for this because it kind of went from their dad to their mom, mom to this other individual, right? So that's the worst case. So if that individual had his house and everything in a trust and it went to his wife, and then if the wife passes away, it comes back to the trust, then the children become the beneficiaries. So you're trying to kind of protect the family interests through the family trust. And I can, answer those questions on a different, whoever has those, we help them set up those family trusts and we can take care of them.
And if certainly if anyone does have any inquiries or would like to learn more about this, I would definitely encourage you to reach out to us directly after this presentation. So I will be sharing his contact details. Um, One other question that I often get from my clients is regarding RESPs. So people contribute to their RESPs for their children over a number of years, and that experiences some growth. And there's also the government contribution that comes in as well. And then I often get asked, well, what happens when we want to withdraw the funds? When my child starts attending an accredited educational institution like a college or a university, how is that, how are those withdrawals treated for tax purposes?
Typically, you'll go under that individual, right? Your child. So your child will get that T4A, whatever it's called. It comes out under the child's name. And so it becomes, most of it will come to them in the form of income. Okay. It is somewhat taxable, but you also have tuition credits. Okay. So on one end, when like let's say they hypothetically have $100,000 saved in their RESPs in the first year university, they would draw 20,000. Okay. So some portion of that will be taxable, some of it will not. The grants portion typically is not because it's a grant, but the other portion, the investment part of it, may be taxable at that time. Okay. So when they take it out, they'll receive a T4A slip, but that son, daughter, whoever it is, they will also get tuition, and then they can roll up about $5,000 of tuition up to their parents. So what I encourage people to do when their children are in school is you file your tax return together as a family so we can roll up the tuition credits to the parents. We can optimize their RSP withdrawals and so on and so forth.
Excellent. That sounds like a much more tax advantageous way of doing it.
Yeah.
Jazakallah khair for that. Do we have any other questions from any of our participants in our session today? I'll just give a moment for anyone who wants to type one in, or you can raise your hand, inshallah. If not, what I'll do is I'll ask one last question, and then Asad, I'll ask you to perhaps share your contact details on the screen for us so that anyone can be in touch with you directly, maybe the website as well. Um, but what is, oh, there we go. What is what's the best way, would you say, for if I'm a business owner, because this is something I also get asked a lot by my medical clients. If I'm a business owner and I want to save on my corporate taxes, would you recommend something like a pension plan for myself under my corporation, like an IPP, or is it better to do an RRSP? What do you recommend?
So we have to have a holistic and a diversified approach. So part of your estate planning, definitely, if you are incorporated, depending on the number of earnings and the profitability of the corporation, we can look at IPPs. That's quite popular. We can look at a combination of salary capping out at 180, let's say, maximize the RSP contribution limit, maybe take out dividends, maybe move money investments into a holding company. So there's a number of things you have to plan. Obviously, for all of our retirement planning, it has to be a combination of multiple streams of income. When you do a salary, you get your CPP. When you have RSPs, you can RIF them and later on. If you have a individual and pension plan that's set up, then that plan gets invested into and it gets paid out in your retirement years, right? So you'll have multiple streams of income in your retirement years. Plus, if you have money accumulated in the corporation, you can always dividend that out, Okay. If you have a holding company, you can move the money into a holding company and you can make your children's as managers of your real estate portfolio and give them a salary, or your wife can be given a dividend to offset the, the passive investment tax, right? Because so to keep your passive investment tax down, perhaps a holding company makes more sense, right? So you move your money into a holding company and you can pay dividends out to your wife or other members of the family who are not working from that holding company. So we have to look at the holistic picture, and IPP is one of that.
Excellent. No, that makes a lot of sense. And certainly having a comprehensive, holistic picture would really yield the best place to offer advice from. So Jazakallah khair, that makes a lot of sense. If we don't have any other questions, what I would just add, I suppose, just to conclude, and then I'll ask Brother Asad just to share your contact details so anyone can get in touch with you directly. Having a good fit between your financial advisor and your investment advisor is really necessary, because both play a very, very important role in your financial success. So I would encourage everyone, obviously here at Sharia Portfolio, we are able to manage the investment portion of it because our firm is licensed as a portfolio management firm. But on the tax side of things, it's very good to have a licensed and experienced tax professional like Brother Asad and his team here. So I would encourage everyone to check out their website. Here is the contact details that he shared on the screen. And inshallah, I believe with that, if there are no further questions, then we can conclude. Inshallah.
Yeah, I mean, there's always issues that come up here and there, but like I said, it's always very important for everybody to get account. And anybody who comes through us through Sharia compliant advisors, we will look after you. You don't have to be big, small, whatever. Like we will look after you. So if you have just personal returns, we can do it for you. We can, give you here and there some tax tips. It's good to establish a relationship with an accountant. If you have a good accountant, keep that relationship alive and well. If you're always looking to see if you have better, opportunities to look at your tax planning, we're always here and you're more than welcome to contact us.
Inshallah. So Jazakumullah khair from us here at Sharia
Yes.
Portfolio.
And so, yeah, looking forward to seeing you this weekend at RAS. Okay. It's a good event coming up. We actually participated in an event last weekend. It was a orphans dinner. A lot of people came there. So, yeah, a lot of community events going on and our community is growing. And yeah, looking forward to working with you.
Inshallah. Jazakumullah khair. Thank you all for attending today, and I look forward to seeing you all soon. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you. Take care. Salam.